2.
Hello, and welcome back to the Broker Power Up podcast, the AIME podcast for strategies, stories, and insights to help you close more loans. I'm Tommy Golightly, joined by Jonathon.
Yes, sir. Today we are just dreaming big dreams, my friend.
Yes,
that is what we are doing every single day.
Every day. That's what we do. And we have a lot going on today. We have the Broker Buzz, where we'll dive into the top posts of the week from the Brokers Are Best Facebook group and discuss what's trending, what's working, and what you need to know. Then we'll go to the sales pitch training, where John helps us become better salespeople. Then we will wrap things up, as always, with story time with John. But first, the fortune cookie. So I'm going back and forth on this. And I'll put you on the spot after the fortune cookie.
Perfect
decision. But this fortune is you will get a great deal on a major purchase.
I like that one today. We just have a few things popping up in my family. So I just like that one. I don't have a lot of insight today outside of sales, right? Always looking for great deals. I think deals are subjective. It's a lot to do with what you want and what you're looking for. But in my family, we are looking at a couple of purchases on our side of things. That's pretty cool. Yeah. What about you?
It hits my nerd side. Magic the Gathering just put out a Spider-Man set, and the box is currently going down in price, which makes me happy so that I can get more of it. So very excited about that. I was predicting it just to keep going up like everything else has. But
it's crazy too, because you showed me a couple things before we started this podcast as well. So that actually lines up perfectly.
It's kind of creepy how that, I guess my wallet will have to be prepared.
Yeah.
But
you're ready to make a move.
Oh, I am. And have already. We'll buy on the way down. But question 1 for the Broker Buzz this week. For Fannie Mae and Freddie Mac guidelines, do you need to be guaranteed graduated from school in order to use school transcripts for employment history? Borrower is employed 15 months full-time and currently in college.
I would assume you mean college for that, right? Question, just to be dialed into it. So Fannie and Freddie, if the client is full-time and not variable income, so pay close attention, or if they're salary, you shouldn't have any issues with the transcripts to begin with. You more than likely aren't going to need them. The client's obviously not graduated just yet either, but I would push back on the underwriter if the client truly is a full-time employee, not variable. If variable pops up, yes, they'll want consistency and other things. And if they're really being pushy for some reason from the underwriter standpoint, you can provide, I guess, the most recent transcripts, even though the client is not graduated. However, Fannie and Freddie, full-time employment, entering the workforce, you don't need the transcripts unless it's a weird extenuating circumstance, but it doesn't sound like that's the case. So if you are being conditioned for it, push back if the client's full-time. That's an easy one.
Got it. Next question. Hey, rock stars. I have 2 clients that make great income. It's W-2 variable for the past 12 months. Previous job for one of the borrowers was as a nurse, full-time, W-2 for 20 years. The other borrower was 1099 income. Any chance this will get through FHA with just 1 year documented variable income? Are there any other programs that can possibly get them into a new purchase?
Okay, so I want to unfold here. There's a little bit of context I think is missing, and it's totally okay. It sounds like it's an overwhelming loan in terms of guidelines. So sounds like 2 borrowers on there. One of them 1099, the other one W-2. The one that was the one that's a nurse, been a nurse for 20 years, was W-2. Sounds like they're at a new job that has variable income. You're asking, can we use that with 1 year? If the other client is still self-employed, I'd assume you're good there. And it sounds like it's just standard tax returns. You're asking about the one borrower. So if that's the case, number one, client's a nurse. Nurses, they get less hours. So if the variable income is within side of what the nurse is guaranteed, you can actually fight and push back on that. You would need a letter from the employer. But for example, a lot of nurses that I do loans for work about 36 hours a week on average. They do 3/12s, 3 on, 4 off, basically is the standard practice for nurses across the board. So if it is 36 hours and you have some pay stubs that are 36, 37, 39, 41, and the underwriter's pushing back, just that letter from their employer, we'll consider that not variable. Now, if it truly is variable and it's a constant influx of ups and downs, you technically, if it's the same line of work, can take into consideration the previous job. I would make sure the exception is granted up front, but then you might have a good shot to use that variable income with inside of 1 year if they use the past as a continuation coming into this new job. But look at the pay stubs, see where the hourly is, and if the client's guaranteed X amount of hours, get that on a letterhead. They will want the word guarantee on there from an underwriting standpoint. That is basically CYA for the investor, for the underwriter, for the lender across the board, getting the word guarantee, because if they ever get audited, they say, hey, client, I have a letter from the employer that says they were guaranteed X hours. Not my fault that they worked less. We got the documentation up front. So that's where it comes from. The answer is there is a lot of potential there based off of how you worded it. It sounds like there's a lot of history with this one too.
That sparked a question in my head. Are there various types of variable income? So like one that's like you were saying, like 36 to 41, would that be?
So basically what it is, Tommy, for variable income, it's okay. If someone's hourly and we reach out to their employer and their employer says, hey, client works 40 hours a week, but then we get pay stubs and the pay stubs don't align to 40 hours a week worth of work, that's immediately variable. Now, we talked about it before. There's generally a 10% discretion that most lenders will give, 5 to 10 depending on the lender.
Yeah.
So that's okay there. But it has everything to do with the hours you're supposed to work. So if we reach out to your employer, right? Lenders reach out, we reach out, WVOEs, written verifications of employment, or just verifications of employment. And your employer says, yep, 40 hours a week at this hourly rate. And we do the math and it doesn't correlate. Underwriter's going to go, yo, variable income here. So that's where it comes from. It's not really specific to a field.
Okay.
It's just specific to the hours they say you're supposed to be working and where your pay stubs are correlating towards.
Makes total sense.
Mm-hmm.
Cool. And our final question, working on a refinance, when we contact the existing insurance agent to update the mortgage clause for the refinance, does that trigger a notification to the existing servicer that a refinance is pending? If so, what are the best practices around that?
So this is the reason we wanted this question in here today. Is this is a bigger conversation that has to be had, and I can tell based on how your question is written. So, Tommy, right now, if you were to look at your documents, when you closed on your loan, you had home insurance that's still active on your house, and inside of that policy, it'll have the name of the lender that they need to pay. If something goes south, it's like this is the person that has the first lien on your home. So they own the lien position. It'll have the loan number of your loan that you did. It'll have the address of the lender and just a couple other things. It's called a mortgage clause. Each lender has different ones based off of where they're at, where they're located, and it's just different for everybody. That doesn't trigger them alerting the other lender, and here's why. On a refinance transaction, that new policy doesn't go into effect until the loan actually closes. So there's nobody to update. Now, once everything closes, they send out all the proper documentation to that new lender and to the insurance and make sure everything is updated accordingly. But you're not going to be alerting most cases the previous lender unless the insurance agent has some sort of weird relationship that they've structured with that lender that currently holds the note. I just don't see that happening. You're talking less than 1% of the potential business that comes in the door. What they're saying, though, Tommy, and what we're seeing a lot of, and you're going to see a lot more of this after the trigger bill has passed. Not a bad thing. It's just the way the lay of the land is going to go. So the trigger bill protects the servicers. These are the people that hold the current loans that somebody does. So, Tommy, the person that holds your current loan, they're your servicer of the loan. Nothing to do with the loan officer that originated the loan. So what we're seeing a lot of, and you'll see more of this continue to happen, is when the refinance occurs and you have to go order what's called a payoff, which is, hey, how much does this person owe on the home? What we're seeing is delay in giving the payoff back to the loan officer, the potentially new LO, because a lot of the times some of these servicers are trying to get back in front of the client because they don't want to lose that business. Now, This is just business. All right. Please understand that. They have an asset that they're saying they want to protect, and therefore sometimes they can delay. And they're within inside of the law. They're within inside of the parameters of the law. So the best way around this, from what I have found, is getting the loan and a refinance as close to the end as you can, and then ask the client to go pull their payoff themselves. If the client goes and pulls it, it's generally a little bit easier. Excuse me, generally a little bit easier, but that doesn't mean they won't call. I've had a servicer call me on my own loan, and I have a 1.99 interest rate because I had to get a payoff for something, and it actually was for nothing refinance, nothing of that nature. It was just something else I had to do. They called me on my 1.99 to try and talk to me about cash out. I don't blame them. I understand why. However, the best way, your best approach, see if you can get the consumer to do it. If not, manage the expectations, tell the consumers what to expect, and do it closer to the end of the file. I would give yourself 5 to 7 days at least if the client can't get it themselves.
Makes sense. And the secret question that I asked before the fortune cookie that I then forgot about promptly. So we have the AIME Podcast Network booth at Fuse. So if you're coming to Fuse, please stop by in Exhibit Hall. I'm going to be at the podcast booth, and we're going to be recording a bunch of videos. So come be a part of it. And as part of that, I want to include the fortune cookie as part of it. So because I've been collecting all the fortunes that we've had, do we let people pick randomly from the ones that we've done, or do I bring more fortune cookies? Or both?
Let's bring more.
Bring more
fortune cookies. Yeah, watching people open those, just seeing their excitement. Yeah. I love that we saved them. I want a picture of them. Because it's just such a great idea. But no, I would love for them to open it there, just kind of see their reaction, and plus we can see how fast some of our people out there can think on the fly. True. It's not that easy, y'all. It's not that easy.
It's a skill. Mm-hmm. It's a skill. Cool. Well, if you want your question answered, be sure when you are posting in the Brokers Are Best Facebook group to use #BrokerPowerUp, and we will get your question read on the podcast. If you are not in the Brokers Are Best Facebook group, you can join by becoming a member and scanning the QR code in this ad or going to the website. And we will be right back for sales pitch training.
Are you a wholesale mortgage professional? Well, then the very first thing you need is a community to help you and your business grow. With AIME membership, your community is right here. Joining our community means never navigating the market alone or operating without a safety net ever again. We are 16,000 members strong of united wholesale professionals. From rookies to top-ranking originators, all dedicated to supporting each other's success so we can grow together. Beyond entry to the best community in the mortgage industry, AIME membership gives you the resources, tools, guidance, discounts, services, and support that help you and your wholesale business grow, thrive, and most importantly, close more loans. AIME membership connects you with leading wholesale lenders and vendors, offering you exclusive access, services, and discounts that save you more money while helping you make more money. Never get stuck on a loan again with our lender escalation program. Grow your network and skills with the wholesale industry's best conferences and networking events. Get the strategies and skills of top originators and industry innovators with AIME's cutting-edge wholesale mortgage education, resources, and content. AIME offers all of this and more, starting at a low price of $19.99 a month. You heard it here first, couple cups of Starbucks coffee. For you to learn more and get started, all you have to do is visit aimegroup.com, AIME group.com/membership. Your community is waiting.
I'm waiting to become a better salesperson. John.
Yes, sir. So I did this today with Chris Vincent, and actually I just added it in our slide over there.
Yeah.
If you can bring it to the front here, I can make it easy for everybody.
Yeah.
So just a quick rough draft of it for all of you that see. I'm going to dive in pretty deep into these here. So from a sales standpoint, talking to as many loan officers as I talk to people that are brand new, a year, 2 years, 30 years, and everything in between. And so over my career, I've spoken to thousands and thousands of clients and looked at thousands and thousands of credit reports. I've been in direct to consumer for some time. I also do self-generated business, quite a bit of it. And so I understand both sides of this fence pretty well. And what I've come to find is I boiled this down to 3 types of clients. Yes, there's a lot more. And what about this one and that one? However, these are the 3 where you can change your trajectory as a loan officer. And I want to walk through the 3 of these with you. So when you first start as a loan officer, we all know this feeling. It's hard to get business. You're going to networking events, you're doing your thing, you're trying to figure out what to do, what not to do. And when you finally get a client on the line that's ready to talk, you get all excited and ready to go, which rightfully so. But what happens a lot of times is the clients that are willing to talk to you for that long, what you tend to find is when you start pulling credit and you start going through assets, there's sometimes something missing. That doesn't make it a bad thing. But the first client type I want to talk about with you all is the not ready, doesn't qualify right now client. The sales strategy here is you want to make sure you're spending 15 minutes or less with these clients. This is an efficiency play. You can build influence within 15 minutes and you're not being rude, especially if the client doesn't qualify right now. So for these types of clients, when you're a newer LO, you need to get in the framework faster to get a process and a roadmap built out for these clients. So the idea here when you first start is you want to learn discipline and understand filtering. Confidence from realizing that not every client closes now. You know these clients. You get them on the phone, you hang up, you're going through the credit report. What about this? What about that? Can we make this work? Oh, they have a couple knocks, but what about this? You're calling all the account executives. You're trying to get it all figured out. And then you have the real estate agent calling you. What, is the client ready? Is the client ready? And you're nervous because it's a brand new relationship and you don't want to ruin that relationship. But then what happens is 2 hours goes by and nothing. And then you lose 2 hours and you're like, oh no, what happened? Now, that isn't to say that some clients you won't connect with at a different level, right? They have a life experience or something pops up. But for this client type 1, it is very important to do your best to diagnose within 15 minutes. And then it's incredibly important to make sure that you have a roadmap for the client to guide them in the right direction. So I have a little script for you guys here. And the goal on this is to filter in first 15 minutes, set a roadmap, and gauge the seriousness of this consumer. What do I mean by that? A lot of people love talking about ideas. We all do it all the time. So a lot of your consumers the same way. Right? I had this happen, no problem. Let's just say it's credit repair. So if it's a credit repair situation, build a relationship with a credit repair company. And the idea is to transition that client over to credit repair. And so they can talk through whatever it is that they might want to do. And what it'll tell you is if that client is actually doing something with the credit repair person, because you build a cadence with that person to check in on the clients you send them, if they're actually doing what they're supposed to be doing and helping out and the client's doing it, you know that's a very serious client. They're putting in the work to really try and get qualified. And so that's an easy follow-up that you would build into your cadence. So below is one of the scripts, but this is client type number 1. And I will take one more step. If you're really new in the first 15 minutes, you pull the credit and you really aren't sure if they qualify, then what you need to do second is manage expectations. Hey, Mr. and Mrs. Client, I got everything in front of me right now. I need about 15 more minutes. So I'm going to schedule a call with you 15 minutes from now. I got to do just a little bit more research to make sure I cross my T's, dot my I's, and get us on the same page. Y'all, these are the loans that cause you heartache later, right? The DPA, you lose the findings, the approved eligible findings, things pop up in process, and you're giving yourself anxiety, the agent anxiety, and then the agent that you thought would work with you ends up never working with you again because of how awful the experience was. So be very cautious with these clients. And then you might say, John, I don't know how to deny, or I don't know how to guide them, or I don't know how to rip the Band-Aid off right away. So let me tell you something. It is uncomfortable every time, but I had to fire my first person ever at 22 years old. I became a leader, had to fire somebody very close to me. It was difficult. But the best piece of advice that I got as I went in and talked to a mentor of mine, I was like, what do I do? Do I do this? Do I do that? Do I do this? He said to me, just rip the Band-Aid off, sit there calmly, rip it off, and take it from there. And that's the same advice I'm going to give you. So you can see a little bit in the script here. Thank you for sharing your info with me. Based on what I'm seeing, you're not in a position to buy just yet, and that's okay. What I like to do is bandwagon. to make the clients feel like, hey, there's hope. You don't want to diminish hope. And that's what a lot of clients fear is like, oh no, they said no, now I can't. So what I say is most people I work with start here. And then I'm guiding them into that next conversation. So that's client number one. Now, client number two.
I have a couple of things on client one.
Please.
One, I really like the efficiency thing. One, both for you, the broker, but also for the client.
Yes.
And then ripping the Band-Aid off goes back to our tried and true, bad news travels as fast as good news. And it just gets them in the right frame of mind of where this conversation is going. But I also really liked how you say that this is where a lot of my clients start, because it gives them the confidence that it's not unachievable. It's just, we need to do XYZ first.
It's going to be hard.
Yeah.
And that's okay too. No, I appreciate that. And that is the point of it, right? I think there is a process, but I try not to spend longer than, I'm at a place where like 15 minutes is pretty dialed in for me. But even if you're pushing slightly to 30 while managing expectations, you put yourself in a good spot. Now, you have client number two. As you build your career, you start to realize, okay, I can kind of figure these efficiencies out. I'm starting to know, have an idea of who's coming in and is ready to go and who isn't. And once you get to that place after your first couple of months, maybe first couple of days, maybe your first year, whatever the case might be. Client number two, these are your first-time home buyers. You have co-borrowers on the file and everything else in between, right? Where, okay, they're saving just enough, 3% down, 3.5%, 5% down. It's everything in between for these specific clients. So for these clients, it's really important you position yourself as an educator and then over communicate and set expectations every step of the way and leverage excitement for referrals. So for these specific clients, the confidence growth here is to teach empathy and resilience. Each closing builds that credibility for you and that confidence with your agents and with the clients. But the biggest thing here, all right, there's a very specific point. For this client, you sell on emotion, but you justify with logic. Y'all know I get very excited when I sell. I go nuts. I get ready to go. When I first started, I would sell on the emotion, but then I wouldn't justify the logic. So what do I mean by that? I'm saving you $400 a month on a cash out refinance. I'm changing your life. Woohoo! I'm all excited. Client high fives. Here we go. I think I have an opportunity in front of me. And then what happens is your client, like everybody else in this world, including myself and you go home, you put your head down on the pillow at night, and there's your significant other. And there is whoever it is that you need to talk to. And then you have your own thoughts internally. And so for these clients, what happens is their significant other says, oh, well, did you ask about this? Did you ask about that? Did you ask about this? And what it does is it just creates a little bit of doubt, because who do they trust more, me or their significant other? Their significant other.
Yeah. And
so then that doubt starts to build, and it's not bad doubt, but then you get the text the next morning that says, hey, I need a couple of days to think about it. We'll get back to you. And then you're like, what happened? What happened? We were saving you $400. What's going on? Why? It's because you didn't justify with logic. So when you sell on emotion here, it's important to go down that path. So for example, let me give you a clear example of how this works. And this also ties into over communicate and set expectations. So what I do is, all right, we're saving you $400 a month. This is super exciting. Now, I do want to take a step back, Tommy, and make sure we're on the same page so you understand where this $400 is beneficial, because it's really important we put a plan together and that this $400 doesn't go to waste. And what I mean by that is the Starbucks, the Tim Hortons, the fast food. So let's just go through the 3 credit cards we're paying off. So Tommy, we're paying off a Discover, an Amex, and a Chase card. Do you know the interest rates on those cards, just to make sure we're on the same page? Actually, I'm not really sure. No problem at all. I've done the reverse math for you. You're at 17, 24, and 32%. And based off of what I see in front of me, the credit report, it doesn't look like you've made any extra payments in the last 12 months. Is there something else that might pop up which would allow you to pay this off if you don't do this loan? You see what's happening now? Yeah, now what are you doing? The logic's kicking in.
The snowball.
Yes, and it's real, by the way. A lot of people just don't want to think about it. And I've talked about this before. If a client says, yeah, I got a $100,000 bonus coming in December, I have a 3% interest rate. All right, well, let's wait till December. Use that $100,000, right? That's what I'm going to tell them. Like if that's
wonderful.
That's what I'm saying, right? Now, that doesn't happen. That's far and few between, but it's popped up. And I say, oh, my goodness. Well, we shouldn't have looked at this because it doesn't make sense to do this anymore. But these are the clients that you're educating. Sell on emotion, justify with logic. So I'll give you a perfect example here of a script. Congratulations, you qualify. Now, I want to set clear expectations because we're working with tight numbers. Things like appraisals, seller concessions, and paperwork need to be handled carefully. My role is to walk you through each step, explain it in plain English, and make sure you're never guessing what comes next. When we close, you'll be 100% confident in what you're signing. How does that sound to you? Wonderful. So you're just really going above and beyond. And I have some of my consumers that are Arabic consumers. We have a lot of clients that are Spanish speaking clients. So adjust it accordingly. The idea here is to make sure that you are confident and the consumer is confident in you and what you're doing and what you're putting in front of them. But sell on emotion, justify with logic. That's client number 2.
I really like leaning into guide and referring to yourself as the guide through the multiple steps, just because it then, in my head, if I have any questions, I just go to my guide.
Right? Yes. That's exactly
you become the one-stop shop for answers.
And y'all, with this one here, because Tommy, you just hit something that made me think of something here. And I talked about it on Chris Vincent's podcast earlier as well. Right here, when you're explaining to a client how you're the number one and you're the go-to guy or gal and all of this. So when you do that, what you cannot do, and I hear a lot of loan officers do this, is when the loan does go south and something pops up, because we're in real estate, is blame an underwriter, blame a lender, blame a vendor. You can't do that if you're telling the clients you're the go-to person. You cannot do that. You take responsibility and you move on. That's just a pain point that I've had recently, and I wanted to share that with the group.
Love it.
And then the last but not least, these are your sophisticated buyer. This is client number 3, high FICO, sophisticated. These are the consumers that everybody wants to work with. They generally are putting down more than 3%. They sometimes have a lot of different properties. Sometimes they're a lot of different businesses, great with numbers. They come in hot. These are the clients that say, okay, I have a plan to pay off my home in exactly 7 years, and here's exactly what I'm going to do, and here's how I'm going to pay extra. They know how to use a amortization schedule. These are the clients. These are the sophisticated buyers, high FICO clients. There's a way to talk to these consumers. These are consumers that know things like a 1031 exchange, a down leg, an up leg, and what that might mean. So even you're shaking your head, right? A 1031 exchange is if you sell an investment property, you have an opportunity within 180 days to offset your capital gains tax by putting it into a new property. There's a bunch of different caveats that come with it and different things you can do with the 1031. That's just one of the examples. So imagine you have a sophisticated client coming in. I'm telling them about 1031 exchanges, and you're talking to them about God knows what, simply because you don't know how that other part of it works. Now, that takes time. I didn't know how to do that in the first year. It took me 5 years to learn about it personally, okay? So 5 years to learn about 1031 exchanges. Then I learned about cap rates, how to underwrite a property. That's an investment. That's a big deal for this consumer. These are big deals. So these clients, you lead with logic, expertise, and wealth strategies. Show mastery and professionalism. Hey, financial freedom isn't just one giant leap into the pool. Financial freedom is all these small stepping stones that we have to continue to build. And obviously, you've done a great job of that. Can you walk me through your strategy when it comes to buying rental properties? You feel that? You feel that difference?
So are these the clients that, or are there clients that come to you with their plan? This is what I'm going to do. And then you have to kind of redline it?
Yes. Now, yes. So that's like, that is a 2.0, but yeah, I have clients, I won't mention any names, but we have a client right now. We're doing her ninth loan for her right now. She's on all 9 with us. And she comes to me for that reason. Will come over to me and, hey, can you take a look at this? Can you let me know what you think about it? And like for that client, it's worth it every time, right? It's worth it every time. Referrals are very strong. When I get a referral, very unlikely you get shopped. They're ready to go. But yes, you are spot on, Tommy. That's exactly the area you want to get to. And that gets us in where it builds authority and a brand. So now you're operating as an advisor, not just a loan officer. There's a big difference here when people come to you for advice that are high net worth, sophisticated. It's a huge difference. And so, yes, you would love to build to this, but the idea is to be a chameleon and be able to work with anybody and everybody in between and teach everybody else along the way as you go through. So you're building big relationships with these people. Confidence growth here. Again, you're operating as an advisor, not as an LO, and then builds authority and brand. These are your people. You've seen them, y'all. You look at Scotsman's Guide, and they have a ridiculous amount of volume, and the units aren't crazy high. They have an average loan amount of like $800,000. How is your loan amount so big? They've built their brand, and it takes time, but learning how to address each client will allow you to get ready for that next client and get yourself to where you want to be. And I'm sure there's even more clients and networks and things that you can build, but these are the three from a loan officer perspective that I found to be the most effective and where people will either find success or drop the ball. So for this one here, here's a very key difference for this client. On the previous client, I said, sell on emotion, justify with logic. For this client, I'm selling logic and I'm justifying with emotion. And the emotion is very subtle, right? The emotion for someone like this might be financial freedom by 40. And it's not crazy. It's not diving into, oh, now you'll have 5-bedroom, and they don't really care about that most of the time. Everybody has some sort of emotional tie. And I do want to find it. If it is paying off your house fast, if it is having X amount of cash flow, that is an emotional benefit to me. And I will tie those threads and justify the logic with that kind of emotion. So here's an example of it. With your credit and assets, you've got great options. At this level, it's less about whether you qualify and more about structuring the loan to fit your long-term goals. We'll look at interest costs, cash flow, and how this mortgage fits into your bigger financial picture. I'll give you the numbers and strategies so you can make the best decision with confidence. Does that sound fair? Yeah, it sounds fair.
Yeah.
So these are the three types of clients that we see a lot of right now. And this is a great place for you to start. We just gave you scripting, strategy, and a way to grow your confidence if you don't write the loan, because the end goal isn't the loan. Where a lot of people think is, oh, I need to write the loan. Of course, that's how you get paid. But if you go into every call wanting to write the loan, your consumers are going to feel it. So give yourself a different framework and focus on what you're actually going into.
I like that a lot.
How was that for today's sales training?
I feel trained.
Nailed it.
And if you want more training live and in person from the best of the industry, you got to be in Nashville in October at Fuse. So if you have not claimed your ticket yet, please do. And try and find a hotel. There are links down at the bottom of the Fuse website. And we'll be right back with story time.
Fuse is just around the corner, believe it or not, another year down. And we are excited for the largest event of the entire wholesale mortgage industry. Fuse National Conference 2025 is taking its show on the road. Now emanating from Nashville, Tennessee, from October 23rd through the 25th. This event is all about sales, sales, sales. Don't miss the chance to join us in Music City for 3 days full of the most cutting-edge content we've ever produced, featuring the industry's top minds, leaders, and innovators. Access the newest tools and resources from wholesale leading lenders and vendors. Take part in our acclaimed workshop summits for free. Catch wholesale's rising stars in their very own breakout sessions. And of course, take part in the best and, quite frankly, the most fun networking opportunities you'll find in the wholesale channel. Join us to grow your network, your skill set, and your business at what will no doubt be the greatest Fuse conference yet. Go to fuse.aimegroup.com to sign up and receive updates when tickets go on sale. Secure your hotel room and get your Fuse tickets for free. That's a $600 value for the prices as low as $199 when you sign up for an AIME annual membership. Don't miss your chance to be there when wholesale history is made at Fuse 2025. I can't wait to see you there.
All right, John, the floor is yours for story time.
All right. Today's story is the tale of the 3 stonecutters. So back in the 14th century, a traveler came across 3 stonecutters working on a cathedral. He asked each of them the same question: what are you doing? Now, the first stonecutter said to them, I'm cutting stone. It's hard work, but it pays. The second stonecutter replied, I'm building a wall. And the third stonecutter said, I'm building a cathedral that will stand for generations. Somebody taught me recently that there isn't a such thing as dumb questions. It's only the answers that you give that actually have an impact on what the question was that was being asked to you. So when somebody asks you, what are you doing? Do you just say, I'm writing a loan? Do you say, I'm writing a difficult loan? Do you say, I'm building wealth for generations to come for this family? You see, these three stonecutters reflect the three types of clients that we just talked about. The first stonecutter, I'm cutting stone. It's hard work, but it pays. You're doing the grind, spending the time with people who might not be ready yet, but it doesn't always pay off right away. It doesn't mean that you don't start there. A lot of life and a lot of sales is perspective. And if your perspective starts here, where you're not afraid to put in the work, I want you to know that this is not a bad thing. Each one of these stonecutters has a purpose. The difference is, what are you willing to do to give yourself perspective to get yourself to that next level? That second stonecutter talks about, I'm building a wall. This is client number 2. It's everybody else in between. They see the big picture. They know they're not perfect. They see the big picture. They know owning a home is a big deal. They know they're building something meaningful. They just might not necessarily know exactly what that looks like. Now, with patience and guidance, that wall the stonecutter is building can be strong. It can be powerful, and it should be celebrated. But see, there's another level to this stone building. There's our third level. The third stonecutter who says, I'm building a cathedral that will stand for generations. Now, my guess is this stonecutter has so much confidence because over the years, all the time he's done this work, it's continued to grow and grow and grow. And now, when they call upon them to build a cathedral, they know the big picture. They know the purpose because they've gone through that process. Now, whether your client is at stage 1 or at stage 3, your job is to help educate them and get them to that next level. See, that third stonecutter is like client number 3. They're not just buying houses, they're structuring wealth. They have vision. But a lot of these clients you talk to didn't always start that way. Every loan officer starts as the first stonecutter, grinding it out, taking every client, even when it doesn't seem worth it. But confidence grows when you realize you're not just cutting stone. You're working towards the opportunity to build something special, to have your brand, to be an authority within inside of your space, and to be that advisor that these clients are looking for. So whether you're stonecutter number 1, 2, or 3, there's always an opportunity to improve. That is today's stories, my friend.
I love that story. That took me a couple different places. One, you're completely right. The 3 different clients, the 3 different stonecutters, they're all on different paths. They're all on different parts of the path. And they're all just needing guidance in how to get what they're doing done.
Yes.
And that's the role that we play, or that you play. And the other one was just the literal stoneworker in the cathedral, thinking about the church I grew up going to, built out of pure stone. And just, I don't know who made it, but I'm very thankful for them. And it stood generations. And so just,
And you and I have talked about this. We've nerded out about it so many times. That's history. Like you see some of these castles that are still standing from like thousands of years ago, and the history behind it and how they stand a test of time. That is foresight. Especially think about that. The average age of living, it wasn't like it is today. 5, 6, 7, 800 years ago. Like these people had a vision, and they were dying at like 40, if that. So just think about.
you were lucky.
Think about that. I love that. Appreciate
Crazy.
you.
Appreciate you. And appreciate you, listener, who's made it all the way to the end of the podcast. Thank you for tuning in to this week's episode of the Broker Power Up podcast. If you found today's tips helpful, do us a favor. Hit the like button to let us know you enjoyed it, which helps even more people see this content. Subscribe to our YouTube channel and ring the bell to get notified every time we drop new content. Share this video with a fellow broker who could use a power up. Remember to lead by example, to lift each other up, to grow together, and most importantly, close more loans. Until next time, keep powering up.